obviously now today I feel much more comfortable in my job versus my first CFO job when I got when I was 32.
Jacob Shulman, thank you for being on 20-Minute Leaders.
Hi, Michael. Very nice being here.
I am so excited to learn about what it means to be the CFO of multiple companies, very, very well-known companies, Mellanox, JFrog most recently, an incredible company here in Silicon Valley. And I'm especially curious to hear and, to learn as a young entrepreneur, what are the responsibilities and the different mindsets that one needs to come with when working as the chief financial officer? Because, I don't know finances. I don't know what that even entails. You raised over $750 million in capital. You've managed and you've seen over $1.5 billion in acquisitions. I mean, these are just astonishing numbers. Jacob, let's just start. Who are you?
I don't know. It looks like I'm a simple guy that trying to achieve my dream career and enjoy all the way through it.
So what is that? What is that dream career that you're talking about?
I always wanted to be involved in business and work along very bright entrepreneurs, kind of helping them to achieve their goals. Mm-hmm. My background is in finance, and I enjoy that side of the business. As you know, entrepreneurs, many times, technologists, they're very bright guys, but they less, let's say, knowledgeable in finance and scalability, how to run the businesses and back offices of corporations. And that's
right. I mean, when I think about entrepreneurs, I think of these crazy people who run up and down the hallway screaming about the strategy and what we should be doing, but they're not necessarily connected to the financial spreadsheets that it takes to then run a successful business that can raise capital through the rounds.
It's not just financial spreadsheets; it's entire back office, right? How to build the scalable processes, how to consider different decisions, whether it makes sense to raise capital now or maybe wait until the product is ready and raise later at the high valuation. All of this decisions that I'm helping them to take.
So yeah, because I think that one of the interesting phenomena that I'm observing is that the millions of dollars that people are talking about in venture funding, it's almost become like just meaningless numbers. Like, yeah, I raised 6 million. Oh, maybe I could raise 10 million, and you're talking about the different finances of a company, and it almost seems to lose the meaning of what is that money actually being used for. So it sounds like is your position really understanding the core of the company and understanding how much money we actually need and how are we actually going to use it?
Yes, absolutely. So first of all, what's our needs, right?
Right.
What the runway we want to get, but also what our core business and what value we could get for that business, right? Yes, many times its valuation is very subjective, but at the end, there is some substantial business behind that, right? So how do you combine these two, your needs, your valuation, and what's true business behind that? This is something that I have.
No, makes sense. So, it gave me the day-to-day of a CFO. I'm observing, I talk to a lot of founders and entrepreneurs and I see how they operate, but I've never really, shadowed a CFO of a huge company like Mellanox or JFrog. So, share with me, you come to the office in the morning, what do you care about? What keeps you up at night?
Yeah, first of all, when I wake up, first thing is, to check how the futures of the market looking at, right? To see what's going to happen today in the market. And especially if you see of a public company, many times the company shares move irrespective of the company business. Different drivers behind the share price. But at the end, every employee of public company, when they come to work, they open Yahoo Finance and they see, okay, oh, what's going on with the company? The company shares down 5%, up 5%, right?
Is that a big thing? You know, when you're an exec in a public company, that you go and you are constantly checking, you know, Yahoo Finance to see what the stock price is?
Not constantly checking, but you do want to have an idea of what's going on today in the market, because many times investors might call if it's a significant movement in the stock, right?
So if the stock, what's a significant movement, for example?
I'd say more than 5%. People would want
Wow.
to understand why, what's the reasons for that, right? And especially if you have very good relationship with investors, they might call you and ask, hey, what's going on with the company, right? What is it that triggering? What is it that triggering this movement in the stock?
Interesting. So you could come to the office and you see like there's a 5% increase or decrease and you just get a phone call and say, hey, I saw we just lost a few $billion here. Can you explain, like, is there anything wrong?
Yeah, so many times, you know, different investors, they look at the time
Wow.
horizon. Time horizon is different. Some guys, they don't care about daily movements because they
Yeah.
invest for the long term, and some guys they have much shorter
Right.
view. So this is obviously the way how you choose investors in your business, who you contacted, what investors you target. That's very important as well.
So Jacob, what is your biggest contribution to the company? So, you know, as the CFO, what is like in the top 3 things that you provide that without you, the company would not be able to continue as it's doing today?
So first of all, I think my primary role is to help the CEO of the company to understand where we stand with our financials, what's the true performance of our business, and what additional investments we can allow ourselves to make to grow the business. And what are those areas where we could invest to help to get the best ROI? I think that's the primary role, because as you know, CEOs, they're very busy people. They drive the product, they drive marketing, they try to close deals, and many times they don't have time and capacity to have that view. So that's what my primary goal. Second, I obviously help a lot with running the back office of the company. The company, when you run the company, there are a lot of laws that you have to comply with. There's, different regulations, etc. This is something that I help with as well, because I want the business side, the CEO, to focus on the business.
Right.
Those are main areas, and obviously being a kind of contacting major stakeholders such as
Right.
investors and all of that stuff. So that's the governance side of the company, and this is something also that I'm helping with today.
How connected are you to the mission of the company? So, you know, how connected are you to the mission of Mellanox, to the mission of JFrog, rather than the financial projections of where the company could get to? And I'm talking, when I say mission, I'm talking about, you know, Google's mission is to connect the world's information. Like those types of missions. Are you there with the executive team?
Of course. This is, you know, as executive in the company, you have to believe in the mission of the company.
Right.
You have to, otherwise there's no place for you in the company. If you don't believe in the mission, you're a leader in the company.
Right.
Not just the accountant that sits and calculates income and expenses. No, not at all.
Right.
You're a leader in the company. You drive the company forward. And if you don't believe in the mission or far away from understanding the mission, then there's no way for you. You have to be in the company.
Totally. Okay, so, you know, talk to me a little bit about why you enjoy being the CFO. I am a numbers guy. I'm a math, but I'm not a huge economics guy. I'm much more, I think, in the realm of you know, the engineering side of things. Why CFO? Why leading the financials of big companies?
First of all, I think my background fits me very well for this position. But this is something that I always was attracted to, the financial side, right? The investment side, the ROI. I'm less maybe creative on the engineering side, although I do have some engineering background. But with the time, I developed these capabilities of truly understanding the financial picture of the company for me, just to take a look at the financials, I know what's going on right away, right? So this is something that I enjoy, and this is something that I feel comfortable with to lead that side of the business.
Are those similar lessons and understandings as what investors need in order to invest, Series B onwards, as you're able to actually look at the details of the numbers?
Obviously, investors in the public companies and VC investors, they're completely different considerations that they make. When the public company investors reviews the financials, they typically could value the company on certain history of the company performance, right? Financial performance.
Of course.
VC investors, many times they don't even have any history of the company, right?
Right.
VC investors, they many times just invest into the idea, right, and into the entrepreneur, versus the public investors, where they typically invest into the business, already established business, comparing how they perform, comparing their success in the market, and then projecting what would be their future success.
No, that makes a lot of sense. And, I still want to know that, you're seeing the companies grow. What is, probably the most fun thing you take away from seeing these companies grow? Is it more of the early stages, the later stages? Because most of your experiences in the later stages, right?
No, I joined Mellanox when they were just $50 million in revenues.
Wow.
And I saw this growth when I left Mellanox. They were over $1 billion in revenues.
Wow.
3,000 employees. So obviously I saw that growth, and it's obviously different stages. You have to deal with different issues, right? When it's smaller company, less established company, you really try to penetrate into the market, to build those processes that allow to scale fast if you're successful. When you're a large company, you deal with a lot with kind of management of the company, coordination, maybe acquiring other companies and integrating them into the business. So it's at different stages. You have different needs.
So and as you're going through these different companies and different incredible experiences, what are some of the patterns that you're seeing in terms of healthy ways of running finances, the maybe unhealthy ways of doing that? I mean, things that I could take with me as an entrepreneur moving forwards when I run my own business. What are the most critical things I should keep in mind besides bringing on a very, very good CFO?
Yeah, critical things is, first of all, it's all about people, right? The people you work with, the integrity of your CEO. I would never want to work with someone who does some shady deals or anything like that, right?
So integrity is a big part of it.
Honesty and integrity, that's very important, because we all come to work to enjoy, and I don't want to have sleepless night just thinking what might happen, right? If my partners decide, hey, maybe we'll cut that corner or that corner. No. So this is all about people first, and second, obviously, truly I enjoy working with true professionals, right? That passionate about their business.
Totally. As a CEO or as an entrepreneur, does the CFO, will the same person usually fit the role as the company grows? Because I imagine that you probably would get a CFO, I guess, when you're, I don't know, Series B, maybe, right, in the company. And then you're growing and, eventually you're going to go public, hopefully, and you're going to have, perhaps $1 billion in revenue. That's a very different, transactional amount from, raising $30 million to getting now $100 million a year. Is it usually the same person who can handle both, or do you usually see people shifting, changing CFOs?
It depends. It depends on the person. Many people just enjoy working with smaller companies, and when the company reaches certain level, then they just decide to leave and go back to smaller companies. Same true for other guys who enjoy working for big companies.
Right.
There are some people like me enjoy to see all the way through growth, right? And many times you just grow with the company and use a lot of common sense.
Totally. Totally. Talk to me a little bit about this idea of seeing big growth as a strategy versus getting boggled up in the current finances. So you're looking at financial statements in the back office and what's happening, but you also have to imagine what's possible for the company to achieve one day. So how do you balance the two, and what are the ways that you are able to then think about the big picture?
Yeah, so obviously you have to analyze the size of your market, your potential, your competition, what they could take. So a lot of what-if scenarios that you build in, a lot of different projections that you're trying to build and see, hey, what makes sense? How big could it be? And what makes sense to invest today to get there?
Right.
Versus, maybe just milking the existing market. So
But that's something that's changing all the time, right? I mean, looking at your market, looking at your competition.
On a strategic level, yeah, you have to do that every so often, right? Typically, on the strategic side, things don't change every day, right? But you definitely have to go through this exercise every so often to see, because different markets change at different pace, right? If you're in a very, very fast changing market, then you have to do that much faster versus maybe, I don't know, established markets with not many players, then maybe you don't have to do that often.
Yeah. Is it a very scary job, what you're doing? I mean, managing, like, because at the end, you're sort of, it sounds to me like you're the backbone of the company. Like, always the company can look at you and say, like, Jacob, are we good? Are we good? Yeah, we're good. We're good. And you're the one that's keen on all the numbers. You know what's going to happen in a month. You're projecting what's going to happen in a year. It sounds like a lot of responsibility, honestly. I'm still learning how to manage my own, my own finances properly. You're managing, billions of dollars. Is it scary sometimes?
No, it's not. Obviously, you have to be properly prepared for that, right? And it all comes with experience. Obviously, now today I feel much more comfortable in my job versus my first CFO job when I was 32, right? That was a bit scary.
What was that like?
What is it?
What was that like? Getting your first CFO at 32 and for the first time
it's
running
like,
the
you have huge weight on your shoulders, and that kind of weighs on you, right? And to make decision knowing that you are the last one who makes decision and the business will perform based on your decision, that's something that you have to get used to.
How did that end? How did that turn out at the end?
That was very successful. That my first CFO job, I joined a company that was going through some sort of restructuring. And, it was at the end very successful restructuring. The company turned profitable, and it was very good exercise for me to understand, kind of to get my hands dirty in different things.
No, incredible. And you've seen growth at Mellanox from 50 million a year to, or you say, $1 billion a year. At JFrog also huge, like fast growing company. Is that really where your excitement is, in the fast growing companies?
Oh yeah, of course. You want to come to the office and deal with with different things, right, every day. And I'm not the person who kind of waiting to do the routine stuff every day. So the company that grow and present those opportunities, and that's what excited me.
So if you have to give some financial advice, and obviously you're not supposed to give financial advice informally, but if you were to give financial advice strategically to young entrepreneurs that are starting their businesses, or even entrepreneurs who have now raised their Series A and are moving forward, what are the most important things that the CEO should keep in mind, given your knowledge of the CFO position?
Yeah, always be frugal, right?
Frugal. Okay.
Don't throw away money when you don't need to, because markets are volatile. Our economic environment is very unstable. So just cash is a king. I don't say don't invest, but know where to invest, what's your expectation from that investment, and just don't throw away money.
Right. I mean, when you deal with these sums of money, how granular does a company get? I mean, when you're talking about, when you're talking about $100 million deal, I always thought to myself, I remember I even asked a friend when I was younger, you buy a house for, let's say, $500,000. What if you could just ask, like, if you were to go to that dealer and say, hey, can you give me a $500 discount on the house? They would say yes, right? Nobody would cancel the deal. Yet in our day-to-day lives, we think a lot before we spend $500. So, and in the same realm, I'm thinking, when you have $100 million deal and you've seen those deals, how granular do people get about, the millions, or is it just, okay, let's just round it up to the next nicest number and make everybody happy?
I think at any deal, it all depends on the materiality, right?
Okay.
Deal of $500, $100 is material to that deal.
Right.
But in deal of $500 million, $100 is nothing, right? So really, when you focus on material things and not just on pennies, that's what helps you to think strategically. On the other hand, my accounting department, when they reconcile bank accounts, they have to go to pennies. Right? And this is what I expect from them.
Sure. Okay, now that makes sense.
It really depends on the role and depends on the materiality of the deal.
I'm sure. Jacob, before we leave, I have to ask you the most important question. 3 words that you would use to describe yourself.
Future.
Future.
Because future, I always try to think several years ahead.
Yeah.
That's something that guides me. And that's why future, different people live in different time, right? Some people live in present.
Yeah.
I'm always thinking about future. Present is less concerning me, but I always kind of think few steps ahead.
Amazing.
That's what it is. I think the second would be fun, because we spend so much time at work, and I'd like to do what I like to do and to have fun with that, right? And third, I don't know, maybe different experiences, because other than work, you have your life going on, right? So you want to enjoy the life as well. Work is very important component of my life, but I have various interests other than work.
I love it. I did not expect those 3 words from a really, really accomplished CFO. But so I always love being surprised. But Jacob, thank you very much for the time. Thank you for your inspiration and for teaching me. We didn't even talk about J Ventures and early stage investing, but we'll leave that for another time. But thank you very much.
Thank you, Michael, very much for having me. Thanks.
Take care.
Bye bye.
Bye bye.